What's up, YouTube? It's Joe Cacciapaglia sitting on the couch making some money investing in fractional real estate online. As usual, today is Friday, so it's time for this week's installment of the 52-week challenge. If you haven't been following along so far, this is where I tell you everything that I bought this week as far as fractional real estate goes across several different platforms, and I invite you to do the same. You can share in the Discord, you can share in the comments to here. A lot of people just decide to DM me, which is perfectly fine. If you do that, make sure it's me. It's not an imposter. There have been some instances of that. I'm never trying to sell you anything in the DM, or get you to invest in anything, give you coaching, none of that. So if you see that, that's not me. But that's one place where you're perfectly welcome to share your purchases there as well. The whole purpose of this is just a virtual accountability group, so we're not just looking at deals every week and never pulling the trigger on buying anything. I think last week I mentioned it was one of my slowest weeks so far. It might have been the week before. This week I was very active. I bought on quite a few platforms. And so let's jump right into it. The first one is I'm continuing to pick up tokens in Umlin. This is the short-term rental in Jenner, California. This is, again, just a pure play on a very cheap token price. This is on Lofty. I'm looking on Lofty Assist instead of on Lofty because I just prefer to look at my properties on here just because it's I like the user interface better. But, I bought these around $14 this past week. And so as long as I can keep doing that, I'll probably keep picking them up. As a reminder, I'm not adding any money to Lofty lately. Anything you see me buy on there, it's because I'm either collecting rents and using those or selling other properties. I'm still just not very confident in them as a platform. I'm not just, liquidating everything. I'm still taking advantage of the deep discounts that I see in properties. Before I forget, please like and subscribe. In the description of this video, I have links set up to all the places where I'm currently investing in fractional real estate online. Some of those are affiliate links. Some of them will give you free money. Read the terms and conditions and make sure that you understand what you're getting into. Do your own due diligence on any of those platforms and on the properties that you see me talk about. Just because I invest in something doesn't mean that you should. Also, regarding those links, Lofty has said that they're finally have fixed their referral program. And it should be up and running shortly. I don't think it is quite yet. But so I thought that was good news. We'll see how that goes. Anyway, Umlin, that's the first property I've been buying on Lofty. The next one, I bought some more of this 1190 Ridgetop Ave in Las Cruces, New Mexico. This is really just a 2-unit property. It's been a pretty steady performer for me, although right now I think we have zero income, which is why the starting price was so low. I paid less than this $39 per token. Again, just because it seems low to me, doesn't mean that you should buy it, right? You want to do your own due diligence. This is one that's done well for me for a while. You can see, let's see, I know he's got the average yield since dating back to February of last year has been 16.72%, and has had very consistent cash flow, right? You've got that consistency. So obviously, at the moment, it's not doing great, but I think I don't remember if we have a turnover. I'm not sure what's going on. But it is, one of the things that is crazy to me is how on Lofty you'll see properties that aren't having any major issue, just have the price tank when there's an interruption in the yield. I don't know who these people are that invest like that, but it is, I think that they're losing money, and I think that's what creates the opportunity for me to make money on this platform. Next, I actually bought a few more tokens in 7014 Raymond Ave. If you have been watching for a while, I used to buy some of these every single month. I got really close to 15% on this one. I think I'm over 13 now, which is like the max ownership. I slowed down because for a long time the price just stayed above my target purchase price, but now it has dipped, and so I picked up some pretty cheap. Probably will continue to do that. This property hasn't received any rent in quite a while. There's an eviction in process now. Once it's vacant, I expect that we'll just sell it. And when we do that, I think I'm fairly certain we'll get a significant increase over the current token price. And that's all I'm doing here, right? If you have been watching for a while, my strategy on Lofty almost exclusively has been to purchase very deep discounted tokens, and then either try to get the property to sell in real life, or just wait for that price to pop because the yield has come back, or one of those two. I'm making very little on Lofty from actual yield. It is not my preferred platform for long-term holds, but for this short-term money, I did an update maybe sometime last week where I went over my total returns, and it's over 20%. So it's not bad at all, but it is, I think, high risk and high reward. Okay, for the next one, I bought a couple more tokens in this 9 Country Club lane. This is I just think it's way underpriced. I have some of these deals have made me think about, should I put more money on the platform? And it's really just at this point concerns about the platform itself more so than anything else. I mean, I think that there's a lot of properties that at the prices that they're selling at, as long as we avoid any sort of really crazy unknown issues, there's the potential to make a lot of money. This is again a short-term rental in Briarcliff Manor, New York. It's going to be featured on Staycation sometime soon, which is a TV show about Airbnbs, and so I think that'll create a nice little pop in revenue for it. We'll see if it does or not. But provided that if I think even a small uptick in bookings from that show, I think will create a lot of value here and give me an opportunity to sell at a pretty big premium once that kicks in. All right, so that's everything I bought on Lofty. On ground floor, I picked up 2 LROs, one of which I'm going to actually talk a little bit more about these. I don't normally dig into them because I am just buying one of every single LRO that's listed. I'm on this platform. My goal is, if you don't know what the LROs are, that's their limited recourse obligations. We're basically buying little pieces of mortgages and notes, to where we just get paid back an interest rate on hard money loans. I'm still at 119 loans. They're paying off faster than I can buy them, or at the same speed that I'm buying them. So I'm just sort of staying in neutral here in the number of loans. The last couple I did double the amount that I put into each one. So I'm only buying, or I guess the last 4, I'm only buying $100 in each one right now. And I've still got some cash just sitting in here, and I'm going to do that. This is one of the first ones that made me worry a little bit, even though and I have the auto investor on, but even when it puts the order in, you get an email, and so I always have the option to go and shut it off. And I didn't back out of this one. It is, but it's an E rating, which is one of their higher risk ones that I have, but with a 12% interest rate. So I think that's kind of worth it. But the thing I dislike the most about this is, so the borrower had already had a ground floor loan out, and I don't know what happened with their timeline, but clearly they weren't done in time. So they refinanced that loan. So this loan is paying off another ground floor loan. And you can see, even though the borrower has a lot of skin in the game as far as they put $57,000 into it, it looks like they could potentially make no money once this is done, right? Like they could end up losing money. And so that's a situation where, when there's not a whole lot in it for the borrower, if they run into problems, now obviously it creates more problems if they get a foreclosure, but depending on their situation, I just think it sort of increases the risk of a default when they have, they might just be doing this project just to get their money back out. That it clearly doesn't look like there's any profit in it for them. So that makes me a little worried about this one. I did still pick up $100 worth of it. I still don't have a single default in this portfolio, which at this point is crazy, right? I've had, 190 loans pay off in full. and then I have 119 open at the moment. 16 are extended, but none are in default still. So I've been pretty lucky. The other one I bought on here is a piece of this one. It's a row home in Philadelphia. And I lived in this area for quite a while. I worked in Philly. I lived in New Jersey. But I think people that see this product in a lot of parts of the country are like, if you're from Texas and you see the home like this, you're like, what is that? Nobody's going to live in that. But these row homes are really popular. They're typically more on the more affordable end of housing. But I lived in one that looked almost just like this in New Jersey. When it was, I think, the second home I ever bought. And so, I just wanted to point that out because when I saw it, it reminded me of seeing these a lot. This one does seem considerably safer, right? It's a lower loan to ARV. It looks like there's more in it for them, although they have a little bit less skin in the game. But, I liked this one a lot more. When I looked at the picture, I thought I'd point that out because I thought that was interesting. I know when I first moved to that area, I wasn't used to seeing these row homes, and these are not, we always call these row homes and not townhomes, but I think it's kind of the same thing. There's typically no HOA. You own it. It's not a condo, right? You own the land, but you have party walls, right? So your wall is touching the wall of your property next to it. And so, like when I had to I had a problem with my roof and had to repair it. You basically just have to coordinate with your neighbor, and be normal human beings where you have no contractual, obligations to each other. Like you can, there are some situations where you can compel them to do stuff in court if they're not letting you do whatever, that's necessary to fix something. But anyway, that is a weird aside. I got into some of those issues dealing with these properties. But the main thing I wanted to point out is I think this looks weird to a lot of people. I know when I first got to this market, it looked weird to me, but I think it's a perfectly reasonable and it's a perfectly desirable property in that market. It's normal. And I don't know why. I can imagine the people that, here I've heard people in Texas say oh, I don't want to live in a used home. Of course I'm going to buy a new home, right? That thought process. So when you see these properties that were built 100 years ago and, are just much different. I know there's just all different levels of experience in the world. And so I just thought I'd point that out because I saw that you don't see a lot of these where I am now. Okay. Weird aside. And the last thing that I bought is a piece of this property on Arrived. I think, I haven't bought very many properties on Arrived at all. I bought this on the secondary market. They say their Arrived valuation is $11.81. I bought these, the token price was $9.50 each. I just bought 100 of them. With the fees and everything, it ends up being basically, $9.69 per, I'm saying token, but it's per share on here. Obviously they were originally sold at $10 per share. I don't necessarily think that Arrived's $11.81 valuation is accurate. But when I was looking at the property, I do think that it's worth more. I think I got I think the discount made this worth it, right? It doesn't have a fantastic yield. What is the yield? No. When you do the performance full view. So, dividend paid 4.59%. It'll actually be a higher yield for me because I'm not, I'm paying less than the $10. Yeah, it's based on $10. I paid a little less than that. So I get a little bit higher dividend yield than this. But it is, I think that I just stepped into some equity, right? I bought it for less than I think what it's worth today. Based on my limited research that I did. It is, this is one that has a loan in place. It's 65% LTV, which I think is perfectly reasonable. It is a pretty low interest rate relative to today's rates. So it's, I haven't mentioned this too much recently, but whenever you buy these deals, that got their loans 3 or 4 years ago, whenever they originally happened. It is like you're kind of like time traveling, right? Like I couldn't get that rate today. And so to buy a property like this for less than it IPO'd at, even though it's not a huge yield, it's an okay yield, and it's proven itself for a little while now. Although the lease is going to end in May, and so they'll have to do a lease renewal or a new lease. So we'll see what happens then. But I'm getting the benefit of levered appreciation with a below market interest rate. And it has done well. And this is a market that I have this is in, where's this? In Gastonia, North Carolina, right? I don't have I don't think I have anything in this market on any other platform. That could be a lie. It's getting hard to keep track across all the different platforms and all the different places where I own little pieces of things. I mean, like I might own, a piece of an LRO on ground floor or something on another platform, but it's a market that I didn't have significant exposure to. It is also 2021 build, so relatively new property. There was just a lot to like about it, especially at a discount. Yeah, I was if I had bought this probably came I don't know when this was originally brought to the platform, but if I had bought it at $10, a year or two ago, probably a couple of years ago, I probably wouldn't be super happy with how it's going so far, especially where people are having to sell it for below that $10 price. But I think that in this situation, it makes a lot of sense. And that's sort of been how almost all of these platforms are, right? I mean, like if you think about it's definitely how Lofty is. Lofty, almost nobody is happy that's bought tokens on Lofty at $50, right? If you bought them at $50, there's very few properties that are doing well from that perspective. I mean, there's a couple, but there's very, very few. If you bought on ARC 7, most of those are at a discount to what you bought on initially. I think for different reasons though, and they're not as drastic of discounts. And the same thing with Arrive, right? There's most of the stuff that you see selling on the secondary market is selling at a discount. Not huge discounts relative to a lot of the Lofty discounts. And I think it's because, I'm honestly not sure why a lot of these, the people need the liquidity, and so they're willing to take a little bit of a hit. But I don't know why people are willing to pay full price for Arrived homes when they list them initially. And then for some reason on the secondary market, you only have people like me who are like, hey, I'm here for the discounts. It doesn't seem like very many people are buying at close to the Arrived valuations. I'm not sure about that, though. I'm just looking at the deals I'm buying. So that's everything I bought this week. I'm curious what you bought this week. Feel free to share it with me, especially if you bought on Arrived secondary market at all. Let me know what you got. Let me know, did you get a discount? Was there anything that you bought that was maybe a discount to their valuation, but you were willing to pay over the initial IPO price? That's, I think, where the magic will start to happen, right? Once one of these platforms figures out how to actually sell shares or tokens or whatever, fractions in the future for more than people paid for them in the past, right? If I bought these 2 or 3 years ago and today I had to sell them for a loss, I'm not going to be very happy about that, especially if I only collected a 4% yield or 5% yield along the way. And so I'm curious, that until that's really figured out, I'm just not sure where we should, and I guess once they start to sell these properties in real life and you can, achieve a decent yield, maybe I'm okay with not having the instant liquidity at a profit, as long as I get access to the liquidity without a huge loss, which is where most people on Lofty stand today, right? Like if you bought at the $50 token price on there and you need to liquidate on the vast majority of the properties, you're looking at somewhere around 30% plus of a loss, and some of them a lot more. Obviously that's not the type of liquidity that people are hoping for in these types of platforms. Selling on Arrive for 5% discount to what you paid for it actually doesn't seem terrible, right? If I had bought this, my plan was to hold it long term, but I need the cash today. Okay, well, that was poor planning on my part because this should have been a long term investment. And so I lost 5% because of it. Like, that seems relatively reasonable. And at the same time, I feel like I'm getting a good deal because I do think this property is worth more today than it was at that IPO, right? So I don't know. Anyway, that's all I've got to say about this. This is everything I bought this week. Let me know what you've been buying. And until next time, I'm going to just keep making mistakes so that you don't have to.